Hello, this is Mike Swanson. I run the website wallstreetwindow.com, and I want to talk with you about what's going on in the financial markets today and what's got my attention. Today is July the 8th. It's a Monday. I'm doing this at 10 minutes after 1 o'clock Eastern Standard Time. Now, what has my attention is the price of gold. And I've been getting a lot of questions about gold because I'm talking about gold quite a bit over the past couple of weeks. In June, we saw gold smash through the $1,350 level, which had been resistance for 5 years. And then it went through 1,400, but then it came back down below 1,400. Some people are predicting a top and a crash because so many times in the past 5 years, gold would get close to 1,400 and collapse. So some people were thinking that was going to happen again. It did not happen, and then it went back through 1,400, but now it seems to be at 1,400 level is acting like a magnet. And so today I want to talk with you about why that is happening with the price of gold. However, most people, frankly, that are out there trading the stock market, paying attention to what's going on, really have zero interest in gold. And what their attention is drawn to is the stock market news of the day. And let's take a look then, before we get into gold, what it is that most people are actually focused on. And to do that, I'm going to draw up the CNBC website, and let's see what's going on in the markets. So the Dow is down 150 points, and Apple is hurting the market because Apple is down. An analyst this morning put out a downgrade in Apple, and the stock has been lagging. The S&P has been lagging. The NASDAQ, it's been a very poor performing stock in the market, and here it is right there. Apple is still off its September high by roughly 10%, while just last week the S&P 500 made a new high. So a lot of people are still invested in Apple. It remains one of the most widely owned stocks by American investors, and that's really the reason why CNBC has to report on it all the time, because everyone that's watching CNBC for the most part owns Apple or has some fascination with it, even though I believe that at this moment there are better ways to make money than simply owning Apple. And this morning on my website, I actually covered the 5 top performing stocks in the S&P 500 so far year to date. The number one top performing stock is Xerox. And by the way, if you are new to me, you're finding this on YouTube for the very first time, you need to subscribe to get my free email updates. Go to wallstreetwindow.com, type any post, and just opt in at the very bottom. There's a form, and you'll get my updates before the open. I cover the most important market-moving headlines and have my own commentary, and that's what you're looking at here. This is Xerox. Next is Coty Incorporated, CMG, which is positioned for a potential breakout, by the way. CDNS, Cadence Design Systems, Advanced Micro. These are the 5 top performing stocks in S&P 500. However, as I note at the bottom, doesn't necessarily mean these are in good buy points at all. The only one I see as potential trading setup there is CMG. But one of the points of this is that, look, despite all the fascination constantly with Apple, there are other stocks, and these 5 stocks are beating the performance of Apple in the stock market averages. However, so is the price of gold. Gold has had a tremendous run since last October, and is outperforming not only Apple, but outperforming the S&P 500, outperforming the Dow, outperforming the NASDAQ, outperforming Facebook and NVIDIA. And so are most of the mining stocks. And what is happening, though, is gold, as you can see, went through 1350. I'll have to get you a longer term chart so you can see why that's so significant, but is now basically floating around, let's say, the $1,400 level. Now, chart patterns are very important to understand what is going on. And I break up the market into intermediate term trends of a stage one, which is a sideways phase. Stage two is a big bull market phase in which the 150-day and 200-day moving averages act as support. Stage three is a topping phase, and stage four is a bear market in which the 150 and 200-day moving averages act as a giant resistance point. Now, the thing is that gold has broken through. Well, it's easier to see if we can draw this out, let's say for 10 years, and you'll see why this recent move is so significant. But gold has had 1350 as resistance now all the way back to 2014. And that whole time period we could call a giant basing phase. And we broke through that base basically in June, and now we're pausing at the 1400 level. So we're in the transition from stage one into stage two. Some of the mining stocks, of course, have already been doing even better than the price of gold and have broken away from the 200-day moving averages completely. They are the leaders of the sector and are great to own. But when you get the initial breakout, let me explain things to you this way. Think of the stage two bull market as a phase that can last, sometimes for years. And the thing is that those big bull phases tend to have phases of their own or stages of their own inside of them. So when you're at the end of a bull market or a giant run, typically what you'll see is widespread interest everywhere, discussion of the move everywhere. The media will be talking about it nonstop because everyone is fascinated with what is going on. You may even go to parties and hear from people there about they're trading this special sector. So if you think back to Bitcoin in 2017, when Bitcoin got to $20,000 a so-called coin, it was talked about constantly on television. You could turn on the CNBC channel, and within 5 minutes, you'd see a Bitcoin segment. If you then went to a Christmas party, you probably would have a discussion at some point about crypto coins and people dreaming it would go to 100,000. It was going to change the world. It was going to replace money. That was a top, a mania that was actually coming to an end, and at that very moment. But the actual move in the coin had been going on for over a year, and it wasn't until that final couple weeks in which this wild speculative top formed. And then, of course, the prices collapsed back below 5,000. The point is that was the very end of a giant rally. The beginning of a giant rally, though, is a different type of psychological environment in which there is very little interest. Nobody cared about the Bitcoins 2 years before that blow off top. Just as right now, as we're talking, practically nobody cares about gold or silver or the mining stocks at all. They're barely talked about on CNBC. And to prove, demonstrate an example of this, let's go back so I can share my screen, and I'm going to load up my little play account I've got with Robinhood. And this is the 100 most popularly owned stocks, ranked by the number of people that own them. Number one, Aurora Cannabis. Kronos is also on the list. So this list has a lot of marijuana stocks on it, a lot of interest in marijuana stocks. It isn't to say that marijuana stocks are at the same spot that Bitcoin was at when it was at 20,000. I don't believe that's the case, but there definitely is widespread interest in the marijuana stock sector. I like to call them dope stocks, but whatever. But I've went down this list today before getting on here. There's Tesla's on the list. The people love Tesla. They love Facebook. Apple is number 4. It's why CNBC has to report on Apple all the time. And this is the funny thing, though. If we go all the way down the list, there's Starbucks, there's CanTrust, there's Intel, there's Slack, there's Lyft, there's Berkshire Hathaway, there's MJ, an ETF for marijuana stocks. That has a $1 billion market cap. But there is not on this list of the 100 most widely owned stocks with people Robinhood accounts, not one single gold stock, not one single exchange traded fund doing with gold, doing with silver, or the mining stocks. Zero interest among the masses. And if you want to make money, you want to get early in on a trend. You want to be in the position to be someone that got into Bitcoin when it was like 2,000 an ounce or a coin, and you're watching it go up to 20,000, and you're going to the parties and hearing people talk about this Bitcoin thing, and you're laughing because you bought at 10 times where it was when everyone else is in. But the only way to get in early in a trend is to do the homework, to follow the charts, understand markets, and really be a student of the markets in order to understand where things are starting. And things are starting with gold and silver. We just broke through a resistance of 5 years. That's what Bitcoin did when it broke through 2,000 back, I think it was at the end of 2016 or early 2017. It was 2016, sometime in that year. That's where gold is now. It's where Bitcoin was in 2016 before it went to 20,000. No one is interested. And that's where you start a big run at. And when it starts, people are nervous. They have seen this sector not do very much for the past 5 years. So when it broke through 1350, it was sort of a silent move. And now this 1400 is acting like a price magnet because there are still a lot of nervous people in the gold market who, have a difficult time holding. They sell it because they're afraid it's going to go back down to 1,300 or 1,250 or something like that. So difficult holding. And what you really have at the very beginning of the move is the people that are the closest thing, or they are insiders. There are people in the industry that have real knowledge of that things are turning around and bottoming, and therefore they have the ability to buy and hold because they are able to believe it's real because they have the knowledge that tells them that. The person that has nothing but a Robinhood account and stares at an app with very minimal information on it does not have the information to have the knowledge to be a strong player in the markets, in the sense of being able to hold something when it's really getting started. So One thing that happens, though, in that beginning move of a big bull market, when you leave that basing phase and you at the very beginning, and right now that 1400 is acting as a price magnet because we're at that very not even the first inning has been completed. It's like the first half of an inning, and you get the breakout and then a consolidation that usually lasts 4 weeks, sometimes 2 months, and that's where we are now. We've had the breakout. Now we're consolidating around that $1,400 an ounce level. The mining stocks are, for the most part, consolidating. Some are breaking out, just going up and up. But the sector as a whole is consolidating. And this creates what is actually perhaps the single best buying opportunity trading pattern in a sector, a market, a stock, period. Now, one of the best books written about picking out stocks and one of the best selling books is this book right here, How to Make Money in Stocks by William O'Neill. My copy is dated 2002. So that's how long I've had this book. And this is the guy that founded Investors Business Daily. And in the book, he talks about, basically advocates a combination of buying earnings growth stocks with chart patterns. But his favorite chart pattern is something he calls the cup and handle pattern. Maybe that's something I'll cover in a future video. And a cup of handle pattern devotes about 20-30 pages to it. But that pattern appears on the after the first breakout at a base. You have a consolidation, and then he buys on that second breakout of the consolidation. Now, I have a similar pattern that is the single best trading pattern I've ever used. I call it the Twofold Formula, and I wrote an ebook about that pattern. It's not the same as the cup and handle pattern. It's not the same stuff that's in this book, but it's a similarity. But I also look at not simply earnings growth in itself, but I look for stocks that have also a cheap valuation. And that's half of my twofold formula. The other half is a chart pattern, similar, but not exactly the same to the cup and handle. But what's important is William O'Neill's got his cup and handle. I got my twofold formula. You can buy the book of my twofold formula. I got a link to it below with this video. But what's important is these two patterns are starting to materialize in the gold market. And that's something that, it only happens once every couple years in a sector or a market. It's not materializing in the stock market. All right. That was years ago. But it's the single most profitable pattern because it appears at the beginning of a new bull market. So the pattern enables you to get in with a very low risk and well-defined entry point early in a move. And when you get in it early in a move, and you can hold something that has the potential to triple your money, quadruple your money, or even 10 times your money. And that's the opportunity that is here with some of these mining stocks. And that's why I'm talking about them so much over the past couple of weeks, even though they're not yet making the headlines of the financial news channels, which, as you see, it's all Apple today on CNBC once again, because that's what people want to hear about. So that's what I wanted to talk with you about today. We looked at the 5 most best performing stocks in the S&P 500. Earlier in this video, we looked at the price of gold, why 1400 is acting like a magnet. And if you want to get involved with my private trades join my Power Investor group, my private trading group. You'll have access then to my 7-position portfolio. And if you just want to read the book about the Twofold Formula, click below here, grab that ebook. Whatever you do. And if you came here for the very first time ever to this YouTube video, go to my website, wallstreetwindow.com, and click any of the articles and scroll all the way down and opt in to the free email list. And I will be talking with you later.